If you look at the portfolio of one of the world's most successful technology hedge funds, you'd expect to see a collection of software companies. Instead, you find billions of dollars allocated to heavy industry. That fund is Coatue Management. It was founded in 1999 by Philippe Laffont, an MIT computer science graduate and former research analyst at Julian Robertson's Tiger Management. Named after a beach in Nantucket, the firm has spent over 2 decades growing from a $45 million startup into a $70 billion investment platform, building its track record through early positions in companies like ByteDance, Spotify, and Anthropic. Because of that history, the market views Coatue's public filings as a signal for digital innovation, a portfolio typically defined by cutting-edge cloud software and AI model developers. But the latest Q4 13F filing reveals a shift. Out of its $40 billion in disclosed U.S. equities, Coatue has placed nearly 15% of its capital into gas turbines, electrical infrastructure, and nuclear power. This allocation signals a move away from pure software algorithms to the physical supply of electrons, targeting the infrastructure required to power and cool AI data centers. To understand the logic behind these moves, we can look at the portfolio by layer, starting with the foundational positions weighted between 5 and 7%. This tier is occupied by the established hyperscalers, Microsoft, Meta, Amazon, and Alphabet. Notably, Coatue holds these megacaps at lower weights than many pure funds focused on artificial intelligence. The portfolio also lacks positions in Apple and several legacy enterprise software companies that have historically been tech staples. Sizing these positions for market beta rather than extreme concentration suggests a perspective that the exponential growth in the software application layer has moderated. The portfolio's central focus appears in the positions weighted between 3 and 6.5%. This is where the capital is aligned with the physical AI supply chain. The top holding at 6.56% is Taiwan Semiconductor Manufacturing. As the foundry for nearly every advanced AI chip designer, TSMC functions as the primary toll booth for the compute industry. Below that are substantial investments in electrification. Coatue has allocated 5.51% to GE Vernova, the leader in gas turbines, and 3.76% to Eaton, which manufactures the switchgear and distribution equipment needed for data centers. They have also placed 5.22% in Constellation Energy, which operates the largest nuclear fleet in the United States. This emphasis on nuclear power corresponds with the requirements of hyperscale data centers, which need carbon-free baseload power that wind and solar cannot consistently provide. By structuring its heaviest bets around power generation and hardware, the portfolio prioritizes the physical layer as the primary beneficiary of AI capital formation. At the bottom of the 13F are several positions taking up less than 1% of the portfolio. For example, the 0.34% stake in Vertiv targets the cooling systems required as AI hardware produces more heat, necessitating a move toward liquid cooling solutions. There is also a 0.37% position in Mastech, a contractor that builds high-voltage transmission lines for the U.S. electrical grid. Other factional positions include Axon, focused on public safety technology, and Natera, which specializes in genetic testing. Sizing these as small, early-stage entries allows the firm to increase its exposure as the market begins to account for the physical constraints on data center expansion. The structure of this 13F indicates a strategy built for a specific phase of technological development. The digital expansion of the last decade is now meeting physical constraints. The growth of artificial intelligence is currently tied to the availability of land, the stability of the power grid, and the capacity of cooling systems. For those tracking professional capital flows, the focus has shifted. The data suggests that over the next 5 years, the critical factors may not be in the cloud, but in the grids and pipes that support it. Note that 13F filings are snapshots of long positions and do not include short positions or international holdings. This analysis is for educational purposes and does not constitute investment advice or a recommendation to trade specific securities.